Hello and welcome back to Invest for the Future. In today's video we're going to take a look at another micro investment app that's available within the Australian landscape that helps us manage our money and encourages people, I guess, to begin their investment journey. I wonder just how many of these apps are going to be available to us before people run out of ideas about encouraging us to invest. But nonetheless, every little bit helps, I guess. So let's have a look at this company. The company's called RAIZ, R-A-I-Z. This is the home page of the RAIZ Invest website, where you go to find out all about what's going on with this particular company. As we scroll down here, we can see that it's offering you the chance to round up odd amounts of money. You can make recurring daily, weekly or monthly payments into your investment account, or you can add lump sums to it as well. Coming down here, talking about the security, but I want to come down and where you find most of the information that you're interested in, come down here. I can recommend that you do go and look at the product disclosure statement. It's actually quite comprehensive, and there's a couple of things in there I do like. Under number 5, it actually goes into quite a bit of detail about how they invest your money, and they are using ETFs. There's quite a range of ETFs that they use, and you can look through here and see what they are. So we've got Australian large cap stocks, Asian large caps, European large cap, US large cap, Australian large cap responsible investing, global large cap sustainability leaders, Australian government bonds, Australian corporate bonds, Australian money market. So they are using all of these particular ETFs to allocate your money. Now, how they do that depends on the sort of portfolio you want to have. Here we have the conservative portfolio with a breakdown of how they invest in that. Moderately conservative portfolio, breakdown, and so on. Moderately aggressive, and their most aggressive portfolio, which they call the Emerald portfolio, which only has 4 ETFs in it, very little in the money market, 20% in government bonds, and then money spread more or less equally between Australian large cap responsible investing and global large cap sustainability leaders. So they're pretty much up front and tell you exactly what it is that your money is going into. I do like that. But as I said, read the product disclosure statement. I think it's important that you do that. Most of the information is obtained, if you like, through this one here, the frequently asked questions, and there are lots of them. I really do like the way they take the time to go through and explain all of it. We're not going to go through all of this. That would take forever on a video, but nonetheless, it's good that they've actually got that there for you to be able to go and answer any of the questions that you might be thinking about. If we go back to the very top though, what is RAIZ? It is a financial service, and we enable you to start investing early and often. How does it work? And they go through and talk about their key feature being their roundups, and we'll talk about that in a moment. And you simply connect a debit card or another funding source and then provide them some basic information. So the signing up process, as with a lot of these companies, they try to make it as simple as possible for you. Lastly, what makes RAIZ different? They talk about a personalised investment portfolio with no account minimums, no commissions, and fractional investing. So they've got some things going for them there. So let's go and have a look and see how it actually works. Here we have a list of all of my purchases over the month of May 2019, and you can see here that I spent on my credit card nearly $1,400. Now, the way this particular app works is that if there's an odd amount, it'll collect up the odd cents up to the next dollar amount. So for this particular purchase of $24.66, it will collect up 34 cents. And for this one, it will collect up 90 cents, and so on. Now, as it's collecting up here, when it eventually gets to $5, it will then transfer that $5 out of your credit card account into your investment account, which all sounds pretty cool, I guess. But looking at that over a period of a month, I've only collected up around about $7, and so if this is all you're going to do in terms of your investing journey, then this is really something that's just a total waste of time. Here's $7 a month, that's $84 for the year. If they were able to get me a return of 10% on that, that would give me $8.40 of investment return, but they've got an annual account fee for accounts that have less than $5,000 in them of $15. And so the net return to me would be negative $6.60. So that is a pointless exercise. You need to be actually adding other money into this account as well. So I suspect what they're doing here is they've got this little gimmick that's going to attract you to their investment platform, and then they're hoping that you will then start adding other amounts of money into your account. So what have they got there? Well, they've got 690,000 people signed up, which sounds pretty awesome. A lot of people interested, but they only have actually 193,000 active customers. So there's 500,000 people have signed up to the app but are not actually using it. Their total funds under management to date, and they've been going for a couple of years, is $332 million. And if you work that out, that means the average account size is only $1,720. So we're talking here about micro accounts. These are not accounts that people are saying, wow, I'm building up and I can live off of that. They're just getting started out. And so, most of these accounts are going to be attracting $15 a year in an annual fee, because the account size will be under $5,000. Now, as it turns out, this funds under management here, the bulk of that is in these little retail funds. They've only got about $40 million odd in their superannuation fund that they manage. So at this stage, the bulk of the accounts are very small, people just starting out, I guess, in their investing journey. So let's look at it from two perspectives. First of all, because RZI, that's the ticker code for RAIZ, are actually listed on the Australian Stock Exchange, it's a company that you might want to consider investing in. Well, if we look at its most recent half-yearly results, which would have been delivered, I guess, to the market in late February, their revenue was $6 million, and their net profit after tax was negative $6.7 million. So at the moment, because they're just starting out, to my way of thinking, they are heading off into Never Never Land, and they need to do something a bit special in the near future to turn that around. Now, of course, they may do that. They're in the very early stages. Average daily trade, $35,000. Very, very illiquid. So pretty risky. Looking at their share price performance since listing, the market is not in love with this company at all. It's listed back here about 12 months ago at way up there at $1.80 was the IPO price, initial public offering, and since then it has managed to work its way down to now being on Friday at 45.5 cents, and it's pretty much near an all-time low. For all of you technical boffins, you might say, well, this is a level of support, let's get in here. Well, that might be a good choice, but wow, this would be a very speculative investment if you were to choose to invest in it. So, invest in RZI? No thanks, not for me. What about investing with RZI? In other words, allocating them some of your capital to invest for you. One of the positives is that they do have 6 investment options, as I mentioned earlier. They do allow you to have small balances, which takes away the issue of brokerage and startup costs and the like. And so I think that's definitely a positive for this company. It also gives you the option to easily make regular contributions by making direct debits from the account that you link to their particular investment accounts. Things that are negative, well, the fees on small balances, I think, are too large. In fact, if you compare it with Spaceship Voyager, which have no fees on accounts under $5,000, that is not a positive for this company compared to Spaceship Voyager. Overall fee structure, it's sort of okay, but we're talking around about 0.5 or 0.6% on an annual basis to have your funds managed. That's a little bit excessive considering that they're just investing in ETFs and you could easily construct your own portfolio of ETFs if you wish to, and the fees for that would just be your brokerage fee to get in. And if you just get into those ETFs and then hold those positions for several years, then the annual fee would be zero, apart from the management fee within the ETF itself. But what we've got here is an overlaying of the internal management fee of the ETF, and then RZI adding their management fee on top of it. And really all they're doing is just investing your money in a few ETFs. So maybe investing with RZI might be an option for you. Certainly for people getting started out, I guess it's a way to go. So weighing up between RAIZ and Spaceship Voyager, it's sort of a 50-50 choice, I think. The advantage to RAIZ is you do have 6 different investment options you can put your money into, but the fee structure is less attractive than the fee structure at Spaceship Voyager. Probably if it came down to the crunch, I would probably go with Spaceship Voyager. But as I said, both of these are giving people with not a lot of money a chance to get started in their investment journey. So that's a positive thing. Certainly not something that someone at my age would probably even be considering using. Our account balances in retirement are significantly higher than anything that you would want to consider giving to RAIZ or Spaceship Voyager, unless you particularly like their approach to managing superannuation, in which case you may well put your money there. Nonetheless, it's always going to be your decision as to what you do. So there we are, RAIZ and Spaceship Voyager, 2 companies in that micro investment space, very much starting up on their journey. Whether they'll become successful or not, who knows? I am probably the last person you want to ask in predicting the future, other than to say that past history is not a bad way of looking at what the future might hold for us. So at the moment, not a lot of past history for RAIZ or Spaceship in Voyager. So in terms of investing in them as companies, not on my radar. In terms of using them as an investment product, well, they are an option out there for you to consider. So as always, I hope you found this information useful, and I look forward to seeing you next time.